Trading offers the exciting potential for financial growth. It can be a source of supplemental income or even a full-time career. However, diving in headfirst without a plan is a recipe for disaster. Just like any other endeavor, success in trading requires knowledge, strategy, and discipline. Technical analysis involves studying price charts to identify patterns and trends. Traders look for indicators that can signal buying or selling opportunities. One common tool is the moving average, which smooths out price fluctuations to reveal the underlying trend. Another popular indicator is the relative strength index, which measures the strength of price movements. Chart patterns like head and shoulders or double bottoms can also provide insights into future price action. By understanding these tools, traders can make more informed decisions about when to enter and exit trades. Remember, technical analysis is about probabilities, not certainties. Fundamental analysis focuses on a company's financial health and its position within the broader economy. Traders evaluate earnings reports, balance sheets, and cash flow statements to assess a company's profitability and growth potential. Economic indicators such as interest rates, inflation, and GDP growth also play a crucial role. For example, a company in a rapidly growing industry might be more attractive to investors. Combining fundamental analysis with technical analysis can provide a more comprehensive view of a trading opportunity. Risk management is paramount in trading. Never invest more than you can afford to lose. Diversifying your portfolio across different assets can mitigate losses. Setting stop-loss orders can automatically exit trades at predetermined levels, limiting potential downside. Short-term strategies like day trading and swing trading aim to capitalize on short-term price fluctuations. These strategies require close attention to the markets and quick decision-making. Long-term strategies such as buy and hold and value investing involve holding investments for extended periods. This approach focuses on long-term growth potential and often aligns with fundamental analysis. Ultimately, success in trading requires continuous learning and adaptation. Stay informed about market trends, refine your strategies, and never stop seeking knowledge.